Hey everyone, welcome back to the channel. My name is Isaiah, and always remember this is an income generating account where we try to create cash flow today so we can invest in ourselves and other facets of our lives. So, in today's video, I'm going to talk about the psychology of trading. And I've talked about this before, but we've picked up quite a few subscribers since, and I think it's important to go over it. Before we jump into that, always remember I sell options, which means when you sell a put, you agree to buy a stock for a predetermined price, and because of that, you collect a credit. When you sell a call, you're agreeing to sell a stock for a predetermined price, and because of that, you collect a credit. So let's just see the money we collected last week. Like I said, we collected just over $740 last week, and my video from Friday breaks down and details all our plays, as well as our running total of over $11,800 collected so far since January 20th. That's when I started tracking. So 14 weeks, we're averaging just over $800 a week, which will average out to about $40,000 a year. So not bad. Not bad. Way to grow the account that way. So let's jump into the psychology of trading. So at the basic of it, when you sell an option, you're agreeing to buy a stock for a predetermined price. Let's use an example here. Let's go to one of my favorites, NIO, trade options. Let's go May 30th, a month out, sell put, $4 strike. That means I am agreeing to buy NIO for $4 per share. Every option contract has 100 shares. So if I would go try to get this filled, obviously the market's closed. You can't trade options after hours. So one contract, I would collect $30. And in exchange, I would give the market $400 of collateral because I would take the strike price of $4, the price I'm agreeing to buy the stock at, and multiply it by 100. Because for every contract, there's 100 shares. So I would give the market $400, and that's what makes it a cash secured put. Essentially, the market's making sure you have that money. Now, let's say over the span of a month that I have the contract open, it started at $4.36. I agreed to buy it for $4. Oh no, this is exactly what happened over the last month. It dropped the whole way down to $3. Should I buy to close the position? What should I do? The market keeps running way down. It's never going to come back up. I'm screwed. I have to buy it for $4. So let's talk about that. When we sell options, again, we only sell options on stocks we're okay with owning. So it doesn't matter how low that stock price goes, because again, you're okay with owning that stock. That's the whole reason you sold the put on it. That's the only trading strategy. That is the only time investment you have into investing is, do you like the stock? If yes, let's go forward with selling a put where we're agreeing to buy it. So, psychology. You need to remind yourself that no matter the price, whatever the market is doing, it does not affect you because you agreed to buy that stock for that price. Don't forget, you selected an expiration date of 30 days out. Well, let's say this was a 15-day span. It went from 436 all the way down to 3. Remember, we're not checking our trading account. We're not stressing over the movement of the stock because look what happened. Over the next 15 days, it ran back up over $4. And things like that happen all the time. I told someone today about a stock that I had to roll and sell covered calls on for multiple years. So I had a stock. I sold a put on it at the $10 price. Means I agreed to buy it for $10 per share. I had 3 contracts on it. So I had 300 shares of the stock. Well, the stock market took a huge tank on me. and that stock went down to $4 per share. So now I owned 300 shares of the stock valued at $10 per share. But unfortunately, the stock was only trading at $4 per share, which means I'm down $6 per share, or 6 times 300 is $1,800 down. Pretty unfortunate. But you know what? There's always a way to make your money back, and there's always a way to continuously make more on top of that. So, I didn't stress for 1 minute about how far it dropped down, because again, at the basic level, I'm okay with owning that stock. And when I get assigned, I sell covered calls. So what I did is I sold covered calls at the $5 strike price. Means I'm agreeing to sell it for $5 per share. Well, hey, I bought it for 10, so I'm still losing if I'd sell it for 5. Well, I sold it for $5 per share, collected a credit. Once it got close to the $5 strike, I then sold at the $6 strike price, which means I'm agreeing to sell the shares for the $6 price. I'm collecting more credit for, again, agreeing to sell the stock for a predetermined price. I did it at the $7, the $8, the $9. And then in 2018, 5 years after I had opened the position, it finally went back to that $10. So my shares got called away because I sold it for that $10, the price I bought it for. But I didn't break even. I actually made thousands and thousands of dollars. Because every time you sell a put or you sell a call, you are capturing a credit. So by selling weekly covered calls, I was selling it in a short enough time frame that the stock did not have a big enough run up that went above my strike price, and I was able to capture small credits all along the way. But essentially, for 5 years, I sold weekly covered calls, made thousands of dollars doing it, and it outpaced any dividend investment. But I never stressed once about what the market was doing. Because one more time, I say it all the time, and I'll continuously say it in every video. I never sell a put on a stock I'm not okay with owning. And the basic level of research I put in is, what does the company do? What is their outlook? How do they contribute to society? If I like that, I sell a put in it. I don't go any deeper than that. I don't look if the stock has been trading at its all-time high, its all-time low. Doesn't faze me. I pick a price I'm okay with owning it at, and I sell a put. And that goes into exactly how the way the market goes up or down, it does not affect my psychology when I'm trading. Because, in my opinion, you can't lose when you sell options as long as you remember you're selling puts on stocks you're okay with owning. So, regardless if you get assigned, it gets called away, you roll a position for a decade, whatever it may be, you're continuously winning along the way, and you are not allowing what you cannot control to consume you. That's why I don't like buying options. You are hoping that the market goes in the direction you pick, up or down, call or put, depending which you buy, and you are staring at your chart, hoping that you read the candles right, that the person that you paid to call out stocks, you hope you got in at the right time. When you sell a put, in my opinion, it doesn't matter when you get in, because you're always doing the same thing, agreeing to buy a stock for that price that you select. So, like I said, I wanted to talk about how important it is to remain calm when you're trading, not be terrified. That stock in the span of a month, the one I just showed you, dropped down an entire dollar, and then it went the whole way back up. And stuff like that happens all the time. Sometimes it takes a lot longer than a month. Like I said, I have a 5-year experience on one of them. And all that time, I'm making continuous cash and growing the account. So it's always a win, in my opinion. As for this week, we're going to continuously sell our puts, roll our positions, and maybe sell some covered calls on those yield max funds, capture a little bit more money from them. With that being said, let's jump into our NBA playoffs. My guy LeBron, I cannot believe he lost again today to the Timberwolves. I thought we had the game in the bag. I'm an Ohio guy. The Cavs are my team, but LeBron brought us a championship. I know he left us twice, but he brought us that championship. So always cheer for him. But in my opinion, I feel like he kind of cost the Lakers the game at the end there with that pass. I don't know why he was passing it so soft. I don't know. Was hoping the Magic would upset the Celtics, even the series at 2 apiece. You know, I still expect the Celtics to win the series, even if they would have lost today, but it would have helped to extend it, and the more tired Boston gets, the better chance Cleveland has. Now I'm watching the Pacers and the Bucks, and honestly, as for the Cavs, I'm good with facing either one of these teams. Lillard did just get hurt, but I'm not sure if it's a series ender or if he just, he'd be out for a couple of plays or whatever. Oh, and the first game of the day was the Knicks and the Pistons. Came right down to the end. Crazy finish. I really thought that the Pistons... I'm pulling for the Pistons in this game. My dad has the Knicks, so we kind of always do our, who you think's going to win. So I was pulling for the Pistons, and I thought they had it. It was almost the same finish as the Nuggets versus the Clippers. They threw up a shot. It was an air ball. Aaron Gordon dunked it right at the buzzer. Well, in this game, the Pistons threw up an air ball, but they did not catch it, and time expired. So I was pulling for them. That's a great series. New York did take a commanding lead after today, but you do have to win 4, and I don't think that Detroit's going to lay down quite yet. Let me know in the comments below, 1, if you have any questions, or what stocks you're looking at for the week. And 2, like I said, if you're a sports person, let me know where we're looking at. Also, if you're into fitness, let me know. Love to talk some fitness on this channel a little bit. I know the primary focus is selling options. Like I said, our goal by the end of this year is to have this account in the $75,000 to $80,000 range, unless I just continuously take from it to invest in other things. Like I said before, I've taken a couple thousand out for the real estate license. I've taken out a few thousand for the coding. So the account will go down periodically because, again, I use it to invest in myself. Because I want to be able to grow all I can, not just in the market. So you will see the account go down. But like I said, by the end of the year, we're hoping to be sitting around 75,000, 80,000, depending how we do in the next 8 months. The first 4 months total. I know I started tracking from the January 20th in the Robinhood history and for the Excel file and the weekly video recaps. But when I printed a year-to-date report statement from Robinhood, it said I was somewhere over $12,000 collected. So if you'd break that down, we're collecting over $3,000 a month right now for the first 4 months. Not bad side income. I mean, what can you do with an extra $3,000 every month? It really can make a big difference in your life, and it really can help to open up more doors. And then the most important, it can help to alleviate stress. So, again, if you've watched it this far and you've listened to me ramble, I appreciate you. Anyone I've worked with and talked with on Fiverr, I appreciate you. And let's all continue to grow together so that we can achieve the financial freedom that we all deserve. And I will see you in the next one.